Top three things this morning. Number one, Asia. Number two, Euro bulls, that theme that we've had since really the third and fourth quarter. And then two-year interest rates on the U.S. Treasury side. First on Asia, just a horrendous start for the year from a year-to-date perspective in Asia. And we'll go through this on the Global Macro Themes call. But again, growth divergences would be the first thing. So again, what you have going on here in Asia is growth slowing on the margin with inflation accelerating, and that is obviously not good. So you look at China's already down 4.2% for the year-to-date. The Kospi was down again last night, down 3.2%, and it's broken from a trade and trend perspective. And of course, Japan's whipping around 1 to 2% a day with some wicked beta associated with the correlation risk on the currency there. So actually Japan down 2.5% for the year to date as well. The only outlier in Asia is really New Zealand, which is up 1.6% for the year. So just looking at that for what it is. Second point this morning is Euro bulls. Again, in stark contrast to what I just said in Asia year to date performance, there's some really good front runners out there in the European equity market. In Copenhagen and in Vienna, which I pointed out in Austria yesterday, both those markets, Denmark and Austria, are up 4.7% already for the year to date. A very wide performance divergence, obviously, versus something like China, which is bullish. And again, the Europeans did not cut rates this morning. The euro held our 135 trend line of support. That is the euro bull thesis, and we like it. Finally, the two-year bond yield spikes up here to a three-month high of 0.42%. That's not going to be good for the PIMCO view. It's not going to be good for the view that short rates can't go up, because guess what? They just did. So again, rates rising. It's going to be, again, a focal point of our Global Macro Themes call, which I will be going through at 11 a.m. And those are your top three things.